Hello and welcome to the January monthly update for Utilico Emerging Markets. I'm Mark Lebbell, Senior Analyst. January's NAV total return increased by 3.0%, outperforming the MSCI Emerging Markets Total Return Index, which was up by 2.3% in sterling terms. Donald Trump was inaugurated as President of the United States, and as in prior months, speculation about his administration's policies dominated investor sentiment globally. The level of uncertainty, especially with regards to import tariffs, trade and foreign policy, remains high. The release of DeepSeek, a Chinese ChatGPT rival, intrigued the market, posing questions about America's leading AI technology and future demand for the latest NVIDIA processor chips. Generally, developed markets were positive during January. The S&P 500 index advanced by 2.7% in the month, and Europe's markets were particularly strong, with the Eurostoxx Index up by 8.0%. Poland's MSCI Poland Index was up by 11.5%. In Latin America, there was a very positive change in risk appetite. Brazil's Bovespa Index was up by 4.9%, and the Brazilian real appreciated by 6.6% against sterling. Despite the threat of tariffs on Mexican goods, the IPC Index gained 3.4% in the month, and the Mexican peso firmed by 1.5% against sterling. Threats of tariffs on Colombian imports into the US were quickly withdrawn, and the MSCI Coal Cap Index was up by 10.3% in January, also benefiting from election speculation. Looking at Asia, the wait continues for tangible signs of China's stimulus measures. The Shanghai Composite Index declined by 3.0%, whilst the Hang Seng Index was up by 0.8%. There was a sharp fall in the Philippines market in January, in response to lower than expected GDP growth, concerns over higher US interest rates, and food inflation. The PSEi Index declined by 10.2% in the month. There was also weakness seen in Thailand, where the SET Index was down 6.1%, and the Bursa Malaysia Index fell by 5.2%. In India, markets were subdued ahead of the Union budget announcement on the 1st of February, with the Sensex Index declining by 0.8% in January. If we turn to UEM's portfolio, the largest Brazilian holdings, Alupar, Orizon and Sabesp, all rose by 7.3%, 9.6% and 6.9% respectively. Serena Energia's share price increased by 18.0%. Colombia also performed well, with Corfi Colombiana increasing by 18.3%, and ISA's share price was up by 10.7%. Both companies re-entered the top 30, alongside Chinese toll road operator Anhui Expressway. Another notable riser was Telelink Business Services, with a 13.5% gain in the month, and Umami was up 6.4% in the month. Asian holdings were generally weaker. International container terminals' fall of 9.1% in the month reflected the sentiment in the wider Philippines market, although Manila Water share price was more resilient and actually gained 0.7% for January. Chinese holdings were also volatile ahead of the Chinese New Year holiday. Serena Energia reversed most of December's strong gains, falling 11.3% in January. Sunny Vision declined by 12.0%, and CITIC Telecom was down by 5.0% during the month. UEM's share price was unchanged in the month, ending January at 213p per share. The discount to NAV increased to 19.8% from 17.4%, and UEM continued to buy back shares. For more details, please do read UEM's January fact sheet, which is available on the website at uemtrust.co.uk. Thank you for your interest in UEM.